Hey everyone, investors have been paying more attention to semiconductor stocks given their role in artificial intelligence and the increasing growth in that category. Taiwan Semiconductor Manufacturing and Intel Corporation are two of the better known semiconductor stocks in the market today. But which one is the better buy? I'll answer that question in this video, comparing these two semiconductor stocks on revenue, on profitability, on cash flow, on valuation, and on what the next 5 years looks like for both of these companies to determine which one I think is the better investment today. So let's take a look. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. Interestingly, Intel and Taiwan Semiconductor were trading at the same price in 2020, or very close to the same price in 2020, as you can see here, around $50 per share. But they've took different directions since that time. Taiwan Semiconductor's stock price rising all the way to $167 per share, while Intel has disappointed investors, falling all the way down to $19 per share. Looking at their revenue over that same time, you can see that Taiwan Semiconductor has experienced phenomenal growth, rising from over $30 billion in revenue in 2020 on a trailing 12-month basis, all the way up to $76 billion in revenue as of the most recent trailing 12-month period. Intel, meanwhile, has seen its revenue decrease from close to $70 billion in revenue down to $55 billion in trailing 12-month revenue in that same time. So looking at their revenue differences alone, you can understand why their stock prices have went in different directions. Looking ahead over the next 5 years, they both have solid revenue growth expectations. Intel has invested significantly in manufacturing expansion and technological innovation, and so its forecast over the next 5 years looks much stronger than it was in the previous 5 years. But Intel has disappointed investors many times before, and investors are hesitant to feel confident about its expectations going forward. Taiwan Semiconductor, meanwhile, has excellent prospects as well, given it's a large supplier to Apple, Nvidia, and AMD, which all have excellent prospects going forward. Taiwan Semiconductor is benefiting especially from the phenomenal growth in Nvidia's revenue because of its large market share in AI accelerator GPUs. Looking at operating profitability, it's a similar story when you talk about the operating profit margin. You can see in 2020, they were very close at 40%, but since then, Taiwan Semiconductor's profit margin expanded closer to 42%, while Intel's profit margin absolutely collapsed, and it's now at just 0.92% over the trailing 12-month period. And that's because of the fact I mentioned earlier. Intel had been investing aggressively in research and development to develop these new technologies, and it's at the same time investing in manufacturing expansion. All of that has brought down its profitability. Looking ahead over the next 5 years, the investors on Wall Street that are following Taiwan Semiconductor stock expect it will grow its earnings per share by 21.5% over the next 5 years. Remember, these Wall Street analysts are making estimates based on the information they have, and nobody really knows what's going to happen in the future, so don't take these numbers as absolute certainty. Interestingly, the analysts on Wall Street that are following Intel, they expect it will have better earnings per share growth over the next 5 years. Analysts are expecting Intel to deliver 29.46% in earnings per share growth over the next 5 years, as Intel brings online all of these investments and it starts to benefit from those investments in new technology and in manufacturing expansion. Comparing these two on cash flow from operations, you'll notice that Taiwan Semiconductor generated close to $40 billion in cash flow from operations in the most recent trailing 12-month period. That's compared to Intel, which generated $11.47 billion in its most recently completed year. Now, these are for the fiscal years 2023 for each of these two companies, as 2024 has not yet been completed. Now, when I look at the valuation for these two semiconductor stocks, I noticed something interesting, and that is that for the first half of the year, Taiwan Semiconductor stock was trading at a cheaper forward price to earnings ratio than Intel. You'll notice Intel was up here trading at a forward PE above 30, while Taiwan Semiconductor was trading at a forward PE in the mid-teens. But that reversed in recent weeks, and now Taiwan Semiconductor is trading at a forward PE of 20, while Intel is trading at a forward PE of 15. Intel's stock price has hit big headwinds recently following a recent quarterly earnings release that disappointed investors. Intel told investors that the second half of this year is not going to be as good as it expected, and that was yet another disappointment coming out of Intel. Investors were already disappointed in Intel over the last 5 years, given the underperformance, and now with a yet another disappointing quarter, it seems like investors are throwing in the towel with Intel and saying, you know what, we've given you so much time and we've given you so much opportunity. We're done. We're just done. We don't want to be with Intel. If we want to benefit from the growing semiconductor market, we'll go with another participant, anyone except Intel. And so now Intel is trading at a cheaper valuation than Taiwan Semiconductor. And I don't blame stock market investors. In fact, to answer the question I posed in the beginning of the video, which one is the better semiconductor stock to buy today? Well, even though Taiwan Semiconductor is trading at a 33% premium to Intel when measured by the forward price to earnings ratio, if I was to pick one of the two today, I would pay the higher price and I would go with Taiwan Semiconductor manufacturing. The company has a longer history of excellent performance, while Intel has a more volatile history, and its forecast for the next 5 years or the expectations of the next 5 years may not come to fruition, given that the company's already disappointed so many times before. So if you're interested in benefiting from the semiconductor market and the growth in the semiconductor market, and you want to pick one of these two, I think Taiwan Semiconductor is the better choice. Now, I didn't talk about the geopolitical risk, and of course, that's in favor of Intel because Taiwan Semiconductor has the bigger risk for the geopolitical matters in Taiwan. Still, even considering that, which of course I incorporated into my analysis, even though I didn't talk about it very much, even considering those risks, I would still go with Taiwan Semiconductor in this choice. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.